First and foremost, we care about revenue growth. That's why these two stocks have outperformed the rest of the packaged food space. They've got great growth. Last year, Mondelez delivered 2.4% organic revenue growth, which accelerated to 3.7% in the latest quarter. Going forward, the analysts are looking for just 0.1% net revenue growth this year, with that number picking up to more like 3% in 2020 and 2021. Now, that may not sound like much compared to the turbocharged growth you're now getting from Coca-Cola, as I mentioned at the top of the show, but they're good, consistent numbers. People like that. Hershey. Last year, they delivered just 0.3% organic growth, although that accelerated to 1.9% in the latest quarter. Going forward, Wall Street's looking for about 2% net revenue growth annually through 2021. This is a tough one. Mondelez has the better organic growth in recent years, internally generated growth that doesn't come from acquisitions. But when you look at total sales, Hershey wins. While we normally look at these numbers on a constant currency basis, meaning we adjust for foreign exchange fluctuations, you need to know that Mondelez is getting crushed by the strong dollar. They get 75% of their sales from overseas. Hershey gets 84% of their sales from the good old United States. As long as the dollar stays this strong, I think Hershey wins on growth. However, if we see a major pullback in the greenback, that will, which we sure have, and it's the strongest ever today, that will give Mondelez a gigantic boost and put it in the lead. All right, how about margins, what they have left? Both companies, after they sell, both companies have been very good about controlling costs in the last few years, though Hershey delivered substantially more margin improvement. Whether you look at the gross margin, what they make after the cost of goods sold, or in the operating margin, the percentage of sales that are left over as earnings before paying interest or taxes, boom, here we go. In terms of earnings, Hershey and Mondelez have had pretty similar profiles historically. However, this year Hershey has pulled ahead. In the first quarter, they posted 13% earnings growth versus 5% for Mondelez. And for the full year, the analysts are looking for 7% growth versus 3% for Mondelez. On the other hand, Mondelez numbers are expected to accelerate to 7% in 2020 and 2021, while Hershey's may slow to about 6%. Still, this is another one where I have to give the edge to Hershey, especially since this is really important. It's got all the analysts who hated this stock switching to buy. Their main competitor is a private company called Mars. And Mars just put through a 9% price increase on single-serve chocolates. That means Hershey can keep raising prices, too. Again, like at the top of the show when I said these companies have pricing power. While Mondelez has some chocolate exposure with Cadbury, which is a really, really good brand, chocolate is still Hershey's core business. This is Cadbury. I like Cramer. All right. How about overall quality of the recent acquisitions? Last year, Mondelez snapped up Tate's Bake Shop. Now, this makes delicious, crispy cookies. And guys from Mondelez, you can keep sending us those. They send us to them all the time. I love it. Now, this was formerly known as Kathleen's Cookies, for those who spend a lot of time in the Hamptons. Hershey picked up Skinny Pop, okay, and Pirate's Booty. Who wins? Again, I have to give the edge to Hershey. Now, don't get me wrong. I love Tate's Plus. Okay, I had, more importantly, a wicked, unrequited crush on Kathleen herself. But Hershey's recent acquisition have allowed themselves to diversify into whole new categories, whereas Mondelez didn't really diversify here. They already made cookies, right? I mean, come on. Although it's sacrilegious, I think, really, to even include Tate's in the same category as the humble Oreos. By the way, completely requited love, if you want to know the truth. Overall, I think Hershey's pretty clearly a superior company, although not by a wide margin. But, boy, the analysts are so negative on it. One by one, they got to go buy, from sell to buy. What about the stocks? While they have similar dividends, 1.9% for Mondelez, 2% for Hershey, again, not as good as the two stocks I talked about at the top, Kimberly or Coca-Cola. They're very different valuations. Mondelez sells for 20 times next year's earnings estimates. Hershey sells for 24 times. Mondelez is actually a little cheaper than the average packaged food stock, which is strange given how it's got superior operator. Hershey's is great, but it's much closer to getting the high valuation it deserves. Plus, both companies are reporting very soon, and I think Mondelez has the better setup going into earnings. Hershey has caught a series of upgrades in the last month that I mentioned as analysts catching up. Stock has rallied more than 25% since the last time I reported. When we hear from them on Thursday, I suspect it would be hard for the stock to rally. Mondelez, on the other hand, reports in a week, and it's up less than 8% since the last quarter. I'm liking this one. So who's the new king of snacking? The bottom line is that Hershey is the better company. But that's already baked in when it comes to their stock. Given how much Hershey stock has run, I feel much more confident and comfortable buying the stock of Mondelez here. But if Hershey sells off, despite reporting good numbers, later this week, you gotta be ready to pounce.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.